Ladies and gentlemen, good day, and welcome to the Virtual Galaxy Infotech Limited H2 FY26 and FY26 earnings conference call, hosted by Atlas Capital. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. Before we begin, a brief disclaimer. This conference call may contain forward-looking statements about the company, which are based on the belief, opinions, and expectation of the company has on date of this call. These statements are not the guarantee of future performance of the company, and it may involve risk and uncertainties that are difficult to predict. I will now hand the floor to Mr. Sachin Pandey for opening remarks, post which we will open the floor for Q&A. Thank you, and over to you, sir.
Thank you. Myself, Sachin Pandey, Managing Director. We are in the FY26 earnings calls. Good afternoon, everyone, and thank you for joining us for Virtual Galaxy Infotech Limited FY26 earnings conference call. Joining with me today are Mr. Avinash Shinde, Chairman, Executive Director and CFO, and Mr. Rutul Shah from Atlas Capital, our Investor Relationship Advisor. FY26 was a strong year for VGIL. We crossed 182 crores in revenue for full year, continuing the momentum built over the last 2 years while sustaining margin consistent with our historical performance. More importantly, the quality of the business continued to improve. With deeper client engagement, growth in recurring revenue, increase in product penetration, and continued traction in international market. Before discussing in the year in details, I want to briefly explain how we think about VGIL as a company. VGIL is fundamentally a product and platform business, not a traditional IT service company. We own the intellectual property of our platforms. We have built over nearly 3 decades these platforms. Our products run critical operations for banks, government institutions, and enterprise daily. This distinction is important because our growth is driven by the platform adoption, product expansion, and recurring relationship, not by merely a linear headcount addition. As AI reshapes the technology landscape, we believe our positioning further strengthens. AI is not as a disruption to our model. It is an enhancement to our products. We already own and deploy these products along with the AI feature. We are actively integrating AI capabilities across our platforms to improve automation, analytics, customer engagement, and operational efficiency for the clients. Our flagship core banking platform remains a largest contributor to the business and continue to scale well in future. Today, the platform is deployed across cooperative banks, district central cooperative banks, state cooperative banks, and other financial institutions. With over 1,746 branches live on the system, and during the FY26 alone, we have added 97 branches. This is the highest annual addition in the company's history. A key development that expands our addressable opportunity in the Reserve Bank of India scale-based regulation framework for NBFCs. Under this framework, middle layer and upper layer NBFCs with 10 or more fixed point service units are required to implement core financial services solutions. The compliance timeline has now passed, and we believe this creates a meaningful opportunity for specialized players with proven BFSI product capabilities like core banking software. To put the scale in this context, India has approximately 350 NBFCs falling within the RBI middle layer and upper layer categories. This is a regulatory-led opportunity that resembles the earlier transition of cooperative banks towards core banking platform, a shift where VGIL established a strong market position over time. We are actively engaging with NBFCs across these categories and expect this opportunity to contribute progressively in our growth pipeline. We increasingly see Vigil not as a single product company, but as a platform of interconnected technology solutions operating across large and structurally growing industry verticals. Today, our business is primarily organized across the three strategic segments: BFSI technology solutions, government digitalization platform, and cybersecurity infrastructure solutions. Importantly, each of these segments independently represents a large addressable market opportunity, while collectively creating a strategic cross-sell advantages, deeper client integration, and long-term recurring revenue potential, which we call as a SaaS. Within BFSI, which continues to remain our largest and most strategic segment, our platform includes eBanker, VPay, and eLOS. These solutions address core banking, digital payments, loan origination, and financial infrastructure requirements across cooperative banks, NBFCs, and financial institutions. The broader Indian BFSI technology ecosystem today represents a multi-billion-dollar market opportunity supported by increasing regulatory digitalization, financial inclusion initiatives, rising digital transaction volumes, and technology modernization across banking institutions. The recently implemented RBI scale-based regulation framework for NBFC further expands this opportunity set meaningfully. Within government and public digitalization platforms, our solution includes eAutopsy, eAPMC, which focus on digital transformation of public system, administrative workflow, and marketplace infrastructure. With increasing government focus towards digital public infrastructure, workflow automation, and technology-led grievances, we believe the addressable opportunity within the government digitalization platform continues to remain significant and under-penetrated across multiple departments and institutions. Our cybersecurity segment is led by Cyber Sentinel, our SIAM software, which is called Security Information Event Management, and cybersecurity platform, which is meant for the handling various cyber threats across the segments. We are increasingly focusing on opportunities across government institutions, public sector deployment, and defense-related infrastructure, where the demand is indigenous, scalable, and secure cybersecurity solutions continue to increase. The Indian cybersecurity market itself is expected to witness strong long-term growth, driven by rising digital adoption, data localization requirements, increasing in cyber threats, and higher technology spending across both enterprise and government ecosystem. We believe each of these verticals has the potential to evolve into a meaningful, scalable business opportunity independently over time. At the same time, strategic overlap between these platforms creates a strong integrated ecosystem advantage for Vigil. Our relationship with banks, financial institutions, government entities, and the enterprise allow us to cross-sell multiple platforms within the same client environment, improving the wallet share, increasing the recurring revenue, and strengthening long-term client relationship. Maharashtra continues to remain a significant contributor to our revenues, primarily due to the structural concentration of cooperative banking institutions within the state. Given that core strength historically has been our eBanker platform and cooperative banking ecosystem expertise, this concentration should be viewed more through an industry lens rather than purely from a geographic perspective. The cooperative banking ecosystem in India has historically been heavily concentrated in Maharashtra and few states, and the other market presence has evolved naturally alongside this industry structure. At the same time, Vigil today has an active deployment across more than 20 states in India, including Gujarat, Goa, Karnataka, Mizoram, and several other states across the eastern and central India. Internationally, we remain focused on Africa and the other developing countries. These regions continue to offer a strong opportunity driven by the financial inclusion, digital banking adoption, and demand for cost-effective and scalable banking technology solutions. Over the years, we have completed 13 international banking projects, including 5 World Bank funded and supported projects, with deployment across Tanzania, Malawi, and the Botswana. Our platforms are already integrated with multiple African payment ecosystem, which helps reduce implementation, timeline, and localization complexity. During FY27, we also plan to add operations across additional international markets as a part of our export expansion strategy. Despite the ongoing geopolitical uncertainties across the central and some global region, we have not seen any adverse impact so far on our international operations, client engagement, or business pipeline. We are continuing to see healthy momentum across the target overseas markets. Export revenue for FY26 stood at 11.7 crores, representing 6% of the total revenue. One of the important strengths of our business model is the increased share of recurring revenue. During FY26, the recurring revenue stood at 76.7 crores out of total revenue of 182.1 crores. As our installed client base expands and cross-platform integration deepens, we expect the SaaS revenue to scale meaningfully over the next 3 years and potentially reach around 200 crores by FY29. Across segments, our active deal pipeline today stands at around 1,000 crores. Historically, our conversion ratio has remained around 20%, which continue to provide meaningful visibility across both existing and new business opportunities. As we look ahead, our focus remains clear. It deepens our leadership in the core banking, expand it into the NBFC opportunity, scale international revenue, strengthen cybersecurity capability, and progressively increase contribution from the adjacent product platforms. Based on our current order visibility, recurring revenue profile, expanding addressable opportunity, and execution pipeline, we believe the business is positioned to compound at around 40+ CAGR over year-on-year over the next 3 years, while expected to maintain a healthy inline profitability matrices. I will now request Mr. Avinash Shende to take you through the financial performance of the company. Thank you very much.
Thank you, Sachin, and good afternoon, everyone on the call. I will now take you through the financial performance of the company for the year 2026. For this year, the revenue from the operations stood at 182.1 crores, reflecting a year-on-year growth of 52%. The EBITDA margin is around 46.2%, that is 84.2 crores, which is consistent with our historical performance. Profit after tax stood at 46.1 crore, translating to a PAT margin of 25.3%. As we continue to invest towards the product enhancement, AI integration, implementation capabilities, export expansion, and participation across the large enterprises and government opportunities, maintaining PAT margin at these levels reflects the inherent strength, operating leverage, and scalability of our product-led business model. Our focus continues to remain on balancing our long-term business growth and disciplined profitability and capital allocation. One of the important strengths of our business is the recurring revenue nature. During the FY26, the recurring revenue stood at 76.7 crores, which is representing around 42% of our total revenue. Our client relations are typically long-term in nature, with contracts ranging between 5 to 7 years, and our churn ratio is less than 2%. This provides a strong visibility, revenue stability, and a cash flow predictability. As of 2026 close, our unexecuted order book stood at 111.6 crores, providing a healthy medium-term revenue visibility. As Sachin also informed that our pipeline is large enough to substantiate our future goals, which stood around 1,000 crores of rupees. We continue to see a strong inquiry and pipeline activity across the core banking, NBFC onboarding, government digitization projects, cybersecurity opportunities, and international markets. On the balance sheet side, total borrowings stood at 39.7 crores as of year end. ROE stood at 29.6%, while ROCE stood at 34.8%. We remain disciplined in capital allocation and continue to deploy capital towards product development, implementation capabilities, and long-term growth initiatives while maintaining a balance sheet strength. Overall, we believe the company remains well positioned to capitalize on the opportunities ahead while sustaining healthy profitability and operating disciplines. With that, I will now open the forum for the question and answers. Thank you.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use their handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles.
Sure.
We take the first question from the line of Sanket Saab from Arth AIF. Please go ahead.
Good afternoon. Thank you for the opportunity and congratulations on a great set of results. So my first question is, can you provide a revenue breakup for the FY26 period across core banking, payments, ERP, government and other businesses? And can you please identify which of these verticals contributed the most in the 62 crore incremental revenue during FY26?
Sure. Thanks. We basically sector-wise break up our revenue. BFSI is stood at 90%. Our ERP business is 9.31%, and e-governance is 0.59%. That contributes total 182 crores rupees. Further, we bifurcate it into domestic and export-oriented market. So domestic market is 93.6%. And export market is 6.44%. And again, the SaaS and recurring revenue we market separately, that is 42.1%, which is 76.64 crores rupees. So this is the breakup basically.
Got it. Thank you, sir. And of the FY26 revenue growth from 120 crores to 182 crores, how much came from new client wins versus higher wallet share from existing banking clients?
So for this current financial year, we have added 17 number of new customers and the revenue from them. The total 17 new clients has been added. Though in India, 15.73 crores has been received from the new clients, and from the export market, around 10 crores has been received from the export international clients.
Got it. And then the balance was from the existing clients.
Balance from the existing client, definitely. Thank you.
Okay. Great. And sir, to reach the 500 crore revenue target by FY29, which is mentioned in the presentation, what percentage of growth do you expect to come from the traditional banking and payments business versus the newer initiatives?
It's basically BFSI segment is a major contributor into that, and we are trying to cross-sell the products as well as add new customers, and we are confident with the pipeline with us. Definitely we will achieve the 500 crores target by 2029.
Yeah, just to add what Avinash is informed, within this, the BFSI will definitely be a dominant player in the revenue. Alongside, we are looking the other segments growth, particularly in the cyber security and e-governance business, which will definitely contribute more than what we are actually getting as a number so far. And in coming years, being as an independent, sectorial focus on those with a clear-cut team size and, revenue generation related, profit centers in that, will be definitely achieve more from those segments also. There will be increase in the percentile revenue from those segments to achieve overall 500 crores. Particularly, we are hoping, larger, the size of business from the cyber security segment, because it's sector agnostic, you can say. It is required in all the segments. Of course, from the BFSI, there will be business in the cyber security from the cross-sale, but from other areas like defense, in the government, and the other sectors, the business will definitely grow from the cyber security side.
Right. Thank you for explaining, sir. And so my last question is, out of the 111 crore order book that we have, how much are we expected to execute in FY27, and then how much beyond that? And also, if you could just bifurcate this order book for me.
So, out of 111 crores, around 60% will be executed within this year. And then, there is definitely a new pipeline which will be added to the revenue. Because these are unexecuted orders.
Right, sir. And can you bifurcate this order book?
In what sense?
In the different segments, like between the different business verticals that Virtual Galaxy has.
So it's around 90% towards BFSI right now.
That is for the
around 90% in the BFSI segment itself now. Because at present concentration of BFSI is around 90%. So these are all existing orders which stood approximately on 90%. BFSI and other 10% is other.
All right. Thank you, sir. That's it from my end, and all the best.
Thank you. We take the next question from the line of Mukesh Panchwani from WC Securities. Please go ahead.
Yeah. Hi, sir. Good afternoon.
Good afternoon.
Yeah, sir. Congratulations on a great set of numbers. So my question is, the market is currently pricing IT services and software companies on the fear that AI will compress revenues, margin, headcount. So how do you view AI for your company? Is it a threat that compress your business, or do you think it is a tailwind, or it is a neutral kind of thing for you?
It's a great question. I will definitely, I'm explaining this. You see, it is a boon, AI, and not a curse at all. And it is a tailwind, you can say, because it improves the productivity and the amount of, quality improvement happens because of this is immense. So far, related to the product development company, there is no harm at all from the AI side, because we are delivering the products with the AI features, which will ultimately enhance the quality of the product and the, ability to adopt those products by the customer will definitely increase, and it will boost the business. Now, coming to the business model, being it is a company which is product company with our own IPR. So within those IPR-led products, if you are adding the AI as a feature, so the feature-rich product will definitely be accepted in the market, right? And there is no headcount-based business here. We never sell a staff augmentation kind of thing, that we are offering the human resource on the particular dollar-based, hour-based. That is not the story here. It is a SaaS company. In fact, there are certain models in the business where we are also getting the payment in terms of SaaS revenue, in terms of outcome-based payments, like on transaction basis, you are getting the payments and all. So it is basically very poised for, the AI story, and AI will definitely increase the revenue share of the company, and it will definitely reach out to the company as a global company in future. That is what we are looking. It's a tailwind, to be honest, frankly speaking.
Okay.
And all the existing product developers and other resources which we have are well understood with the current AI trends. They are adopting those trends while developing the product. So we are already engaged with various companies who are offering these LLMs, and for example, we have a agreement and arrangement for development with the cloud also, and our resources are also using cloud while preparing the product development. Get a good robust product engineering. Every product which we are delivering is now a AI adaptive and AI ready product. And to address it, I also want to inform you that we are into agentic AI development. We launch our product, which is basically an AI agent called Virtual Pani, which is basically a conversational AI, which is then integrated across the segments. We have integrated it with the core banking software, integrated with cyber security also, and there are a lot of use cases for it. So I mean, just to inform you that it is basically a win-win situation for us, right?
So I will also like to add here. Basically, AI is an enhancement layer for all our existing products, rather than a standalone product. All products of us, we are integrating AI capabilities into all our products, analytics, automation, and customer engagement. As Sachin says, cyber security and conversational AI, workflow management systems, to improve efficiency and to give better services to our customers. So we are using AI as an enabler, basically, not a standalone product. And with this AI, Virtual Galaxy is definitely an AI-first company, early adopter of AI, and providing AI-based services to its clients, so that the client gets better services and stickiness of client again will be with the Virtual Galaxy. That's what the AI. So I like to inform you that we are using AI at large scale for providing better services to our clients, rather than it's a standalone product. Thank you.
Got it, sir. And sir, you have developed several new products over last, I think, 2 years. I was going through your website, so there's Transact Core, Finflow, Virtual Vani, Cyber Senator, Autopsy. So could you walk us through, what is the current status of these products? Are these live or in the pilot stage, under development? And also, if you can throw some light, what kind of TAM do you see, and what kind of revenue we can expect from these over the next 2 to 3 years? Because right now we are much dependent on BFSI segment. So it would be great if you can throw some light on these also.
Sachin, can you answer this?
Yeah, sure. I mean, these products which you just mentioned have been recently, of course, inducted, and they are at the early stage, gradually growing. Definitely, they will contribute more in the coming years. and we are very hopeful from, various segments. Basically, what we do is these products are for different segments. Some of them are for, say, let's say, e-governance side. Some of them are like even the sector agnostics also. So they will contribute definitely in future. There are teams in the marketing and the sales side for, specifically getting the revenue from these particular products, so that we can have a good revenue share from them also. Now we are having, let's say, 90% here and 10% with others. But definitely it will get improved somewhere, let's say 80-20 ratio, or maybe say we are trying to 70-30 ratio in coming 3 years. So there will be a diversification from the BFSI and other segments as well.
Got it, sir. Got it. And so my last question is what is the top line and bottom line guidance for the current year?
So current year, that's already in our script also. We are expected and willing to grow at 40+% year-on-year for next 3 years. And our margin, bottom margin remains approximately at 25% for next 3 years, which we are historically maintaining also. So you can take that as a guidance. Around 40% plus we are growing as a CAGR, and 25% is the bottom line.
Okay. Thank you, sir. I'll come back in the queue.
Thank you. We take the next question from the line of Garvita from Seven Island PMS. Please go ahead.
Hello. Hi. Good afternoon, sir. I have a few questions. First of all, as you have told that you have added 17 new customers in FY26, request you to please highlight any marquee clients, name of some clients, if possible, sir.
Giving the name of clients, some clients?
Yeah, just a few clients to get a flavor of how large the clients are.
With respect to BFSI, we have 2 state cooperative banks. One is the Goa State Cooperative Bank, another is the Mizoram State Cooperative Bank. Then we have 10 district central cooperative banks within the Maharashtra. The one bank is each district, so 10 districts we have covered, 10 district central cooperative banks. Then in export market, we have Malawi Agriculture and Industrial Corporation, which is a subsidiary of Reserve Bank of India. Then we have Botswana Reserve Bank Corporation, which is again Botswana Government Corporation, and few World Bank projects have been already completed by us. This is a mix, including Government of Maharashtra is also our client. These are the major and highlighted clients.
So these are some of them that you have mentioned are already our existing clients. I'm asking, out of the new 17 clients which we have added, if you could name a few.
New clients you are asking? So the Botswana is there. Botswana Development Corporation is a export-oriented client, which is a government of Botswana. Then few World Bank projects within Maharashtra state, like a smart project is running in the state of Maharashtra, through which we are providing MIS software for animal husbandry and director of marketing as well. And few other
there is Sangli Urban Cooperative
Sangli Urban Bank, which is a scheduled commercial bank. These are the major clients which has been added.
Okay, sir. And so majorly new additions has been done in the BFSI segment only, right?
Yes.
Okay. So my
can you
question is...
Yeah. Mm-hmm. Yeah, please go ahead, madam.
The next question is about the cash flows, sir. Do we expect the net cash flows to turn positive in FY27?
Yes, definitely. So at present, cash flow is since our revenue has been booked in the last quarter, major revenue has been booked in the last quarter of the financial year, so it is get realized in this quarter. So you are finding it gap over there. Otherwise, it is time-related impact, not reflective of any underlying business performance. So business remains strong and everything is there. So it's the impact of last quarter billing, basically, which is definitely once the bill, it's around 60 to 90 days cycle is always there.
Okay.
Okay.
One more question on the cash flow side, sir. Highlighting the cash flow statement entry, which I see one is in the tangible assets. So we have recorded an increase of 109 crores in the tangible assets. Could you please explain what this increase pertains to in the tangible assets?
Tangible asset. Okay. Let me go through 1 minute. Hello. Do you want the bifurcation of tangible assets, no?
Yeah, if you could please highlight what are this increase allocated to?
Yeah. So, the BOT projects, 60 crores, then the data center and other, there is a 35 crores, and for the GPU, it is 5 crores. So, that is basically the bifurcation of the tangible, totaling 100 crores.
Okay. All right, sir. Those are my questions, and we remain aligned to our guidance of 250 crores approximately for FY27, correct?
Yeah.
Okay, sir. Thank you so much, sir.
Thank you. We take the next question from the line of Lavnish from Blue Ocean Asset Management. Please go ahead. Lavnish, if you could please unmute your line and proceed with your question. Since there is no response, we'll move on to the next question, which is from the line of Heath Gorecha from Ventura Investments. Please go ahead.
Hi, good afternoon. Thank you for the opportunity and congratulations to the management on the great set of numbers. So, sir, I went through the presentation and it was very well prepared and it got most of the questions answered. But, sir, I have few questions. So, first question is, sir, what, according to you, you have the guidance of 40% around CAGR for next 2 to 3 years, right? So, what are the key growth drivers that the management is focused for FY27 and FY28? So, can you briefly tell me about that?
Come again, the last, sentence was not clear actually. Your voice was, distorted. So if you can come again.
Are you asking for a key growth factors?
Yes, sir. Growth drivers for FY27 and 28.
So the growth strategy basically is centered around our the flagship product core banking and BFSI technology solutions. We are scaling those products and again the new products which are being there, we are cross-selling to the existing customer and those products are customer agnostic, BFSI agnostic, are also willing to deploy through various government and private sector like Cyber Sentinel. And also international expansion across Africa and developing countries is also there, which is one of the important growth driver, supported by existing implementation experience, because we have 100% ready with the payment integration and API integration within the Africa as well. So it's a mix of all existing and a new client with more focus on cross-selling the products, new products, and adding a new customer with the customer agnostic products like Cyber Sentinel. Sachin, you want to add something?
Yes, sir. So
Yeah. I mean, basically the product mix which we have, it becomes a integrated solution from one vendor where the developing countries and the cost conscious customers where they are looking for a combined solution from one entity with the total cost of ownership, which is better for them. We stood better. That is the main growth driver. The other is like, the advantage of this geopolitical crisis, rather it will be a boon for us because now every nation wants to have a solution which is kept in their own premises rather than accessing from the bigger cloud companies which are mostly multinational. We also put those kind of arrangements with them. And here in India specific also, this business is self-reliance, in terms of technology is also considered to be another, a growth driver for homegrown IPR-based companies. There we are getting a good, business advantage. Thirdly, the increase in the penetration towards the each and every citizen in terms of the digitalization, which is called digital transformation. So the payment ecosystem is again, propelled across India to various, sections of the society. There also the role of BFSI through the digital payment is, very much imminent, and that becomes a growth driver again for us. This is what I would like to submit. The other geographies where the same challenges they are also facing, we become a dominant player wherever there is a requirement in the developing nation. So most of them are willing to get such solutions which are deployed on their cloud, running across the nation, and making their society in general as a digital society. These are the drivers, basically the growth drivers. I hope I, satisfy most of your queries.
Yes, sir. It was very clear. Sir, one follow-up question for this, sir. Could you share your outlook on operating leverage and margin expansion as the business scales over FY27 and 28, sir?
So margins are remain same as we are given the guidance. It is the business we are willing to grow at around 40+%, and margin bottom line remains 25% approximately. That's the same. The margin is not going to much increase or decrease basically. We are operating on the 25% PAT margin.
So to add this, I would like to suggest you that we are more hungry for getting the volume in terms of the top line. At the same time, maintaining the same profitability. That is what the idea going forward. Rather than simply putting our efforts of just increasing the margin, because you will have to negotiate and at the same time get more business, more spread over more geographies. So that is the mantra where we will stand, increasing the top line. Bottom line will follow in the inline manner, which we are maintaining, as a past experience. So this is what the idea of growing further. And the business scope is also big. You can see that it has to be addressed. Let's say 1,500 cooperative banks are there, 300 district central cooperative banks are there. Now 350 NBFCs which are likely to shift from general products to the core banking products, then roughly around 1.5 cooperative societies, out of which 25,000 cooperative societies are poised for going for the, this core banking sort of business, providing at par, services to their customers like a bank. So there also we are offering our solutions. This is only in India. If you go in the developing nations, there are a lot of development corporations, the banks and the MFI, they called SAPOs in Africa. Lot of business. I mean, we have to approach and get that business. That is what the mantra is. Maintaining the margin where we are basically right now. So this will in general increase overall, wallet automatically because of the top line increase. Bottom line will follow.
Okay, correct, sir. Got it, sir. Thank you so much for your answers.
Thank you. We take the next question from the line of Raj Dalal from Dalal Investor Advisory. Please go ahead.
Hello, sir. Thank you for giving me the opportunity. Sir, I have a few set of questions. So my first question is, could you please share the current traction and pipeline trends in the NBFC and MFI segments?
Yeah, can you come again? You asked something related to MFI or something like that. Yeah, please.
Yeah, sir. Sir, I wanted to know the current traction and the pipeline trends in the NBFC and the MFI segments.
Yeah, I mean, we are on it. What we said in the pipeline of, 1,000 crores around which we discussed, there is a pipeline within that. It is not segregated as such right now, but there is a definite pipeline in which we are trying within that segment also. Of course,
okay,
it will, being it is a new, market for us, there will be a new opening, but obviously it will take certain time, right?
Yeah, sir.
Yeah.
So, sir, could you elaborate on the cross-selling opportunities, like across our business verticals in banking, AI, or cybersecurity solutions?
At present, it is like we said, the majority business is coming from BFSI, but there are separate teams to, increase the business footfall from the other segments as well. So, I mean, out of the opportunities which we are looking for, is basically, you can say, most of them are from the banking segment, no doubt, but we can bifurcate it, let's say 70-30. The opportunities, 60 to 70% from the BFSI segment and the remaining from the government and the cyber security side.
And combine these both cyber security and BFSI is around more than $500 billion market worldwide. So we are just 0.01% targeting, not more than that. That is also suffice our purpose, which we are willing to grow at 40% plus.
Sir, one last follow-up question. So what are the key factors that enable Vigil to compete against the largest or the big players in the BFSI sector?
Right. So, I mean, there must be a differentiator within your, ecosystem developed compared to the, the giants which are there. Although they have occupied the space, particularly in the bigger banks and the bigger NBFCs probably, but there are a lot of players, I'm saying that in the horizon, which is basically within India, out of India, particularly in developing countries, where you can increase your footfalls, grow more, and then further compete them. That is the idea basically. Because if you are putting your efforts only wherever they are already in presence, doesn't make sense. Rather, if you compete fresh, where they are also competing and the customers maybe outside or where the customers are looking for the cost effective as well as the new age technology based solutions where the AI is a differentiator, the blockchain is a differentiator, we can play a better role, and that way we can compete with the bigger players. In fact, there are certain, areas where we are having specific differentiator in terms of the implementation strategy, service, and through which we got 2 orders earlier, where we replaced the Infosys product, from the DCC segment. It doesn't mean that their product is bad or ours is only good, but there are certain things where we fit better, which we will see to it that how it can be leveraged.
Okay, sir. Got it. Thank you, sir. All my questions have been answered.
Thank you. We take the next question from the line of Mukesh Panjwani from WC Securities. Please go ahead.
Yes, sir. My question was almost answered. Just I would like to extend the question. So my question is, given the surge in cyber threats post this Anthropic Mythos, how is Cyber Sentinel positioned? What is the TAM and what kind of revenue do you see in next 2 to 3 years just from this particular product?
Yeah, I mean, I said earlier also in my explanation that there will be definitely surge in the opportunities and business from the Cyber Sentinel side, particularly, cyber security solution which we are offering. The threats, the geopolitical tensions, that all contributes is a growth of the business. And apart from this mythos which you mentioned, every business entity is now looking for the solutions. Somehow they would like to protect. There are a lot of threats apart from that which are coming from the the hostile countries also, and because of which this has to be protected. The challenges are also there from the quantum kind of attacks based on which those quantum kind of attacks has to be, so there will be some quantum based security which as a differentiator we have implemented right now in our product. So these are in nutshells which we are offering, and it will definitely boost the business. The contribution, I said that in near future, let's say 70-30 instead of now it's a 90 which is mentioned. It will be 70-30 definitely in coming years, where 30% is revenue which is coming from the other products, which has got a major share, particularly from the cyber security solutions.
Okay. And on ground, do you see the inquiries coming for this particular product?
Yeah. I mean, we bid also. There are a lot of bids which are there in those pipelines which we mentioned, and we are hopeful that we will get a good response and the business from the market.
Very interesting, sir. Very interesting. Thank you.
Thank you. We take the next question from the line of Khushi from Banu FinCorp. Please go ahead.
Yes. Hi. Congratulations on the good set of numbers, sir. I just wanted to understand the purchase of stock and trade line a bit better. Could you help us understand what's typically included here and how we should think about this cost as the business grows?
Look, for this solution as a SaaS model, which is called hybrid integrated SaaS, and it comprises all the hardware and software as a combination, and that becomes a hybrid integrated solution for the customer, wherein they want to just plug and play and run the product, in which we cover this cloud infrastructure, the servers, the racks, and then your routers, switches, and firewalls, combining with the cyber security solution, and then our application product of that particular segment, may it be BFSI or e-governance sort of. And then that entire deployment is offered to the customer as a hybrid integrated SaaS. So that's why these particular tangible assets are, this infrastructure is
Okay. Am I audible?
Yes, Kashi, you are audible.
Yeah. So, thank you for this. Also, another question is that on the product and software side, how do you think about capitalizing these investments versus taking them through the P&L?
So, it is based on order to order. Certain projects have been capitalized particularly, and the certain are covered based on their categorization. They are considered under P&L.
Okay. My last question is that as you look at the business over the next few years, where do you see yourself, where do you see most of the capital being deployed?
The capital has been deployed to enhance the product, add new capabilities, and building an infrastructure for an ecosystem to serve the clients. These are the major areas where the capital has been deployed in the coming year. Like creating a data center for a client, for our in-house client, enhancing the product, adding the AI capabilities, and adding the more stack to the product. These are the major areas.
Okay, got it. Thank you. Thank you so much.
Thank you. We take the next question from the line of Ayushman Thakkar from 18U Advisory. Please go ahead.
Hello, am I audible?
Yes, please.
Yeah.
Good afternoon, everyone, and congratulations on the stronger quarter. So my first
Thanks
question is on the client relationship. So as the company grows, we see that where do you see the biggest opportunity to deepen engagement with existing customers and to increase the revenue from the current client base?
So, with respect to client relationship, so what happens in our case that we develop the product, then we give the product to the customer, all other related and development of the product, implementation of the product, then servicing of the product. Entire things has been catered by our own in-house resources. And that's why the relationship with the client is very sticky, and deep relationship is always there. That is why we got less than 2% churn ratio. And also client gives us the repeated business for all other new products and new add-ons which we have developed. That is what the main company strength.
Understood. That's helpful. And I had one follow-up question from my side on the international business. So how should investors think about the export opportunity over the next 2 to 4 years? Do you see exports becoming a meaningful larger part of the revenue mix going forward?
Yeah, definitely.
Sachin, please answer.
Yeah. We are looking for various developing countries where we are actually working very closely, and particularly we are hopeful from the Africa and GCC regions. The overall business growth likely to be more from those segment and those particular geographic position. And of course, from both sides, like from the BFSI and other areas, we are definitely going to get the more export business. Right now, it is stood around 6%. We are definitely expecting to, make it to.
Ladies and gentlemen, we have lost the line of the management. Please stay connected while I reconnect the management. Thank you. Ladies and gentlemen, we have the management line reconnected. Ayushman, if you could please repeat your question for the management. Thank you.
Yeah, sure. I'll do that. Hello, am I audible?
Yeah,
you are.
Yeah. So what I wanted to ask is that what is the future on the international business? How should investors think about the export opportunity over the next 2 to 3 years? And will it have a meaningful larger part of the revenue mix going forward?
Yes, definitely. We are very bullish on the international expansion since we have a very strong presence and the product is also matured in the African countries. So we are willing to add more number of African countries as well as developing countries to our portfolio. And our international team is also working very hard to do the business. And definitely we are willing to grow from 6% to around 20-25% in near future down the line. So this will be definitely adding good revenue to the company's top line and bottom line both.
Understood. This is really helpful and all the best for the future.
Yes.
Thanks.
Thank you. We take the next question from the line of Sanket Saad from Earth AIF. Please go ahead.
Yes, thank you. I have one follow-up question, sir. So we had diverted our object of the issue from the IPO to spend more on the Soundbox business vertical. Can you please highlight, what is the update on that side of the business? How have we progressed? And from channel checks which I have done in the past, 1 or 2 months, I was able to also find out that the dynamics in this particular part of the business have changed for your competitors as well. So if you could kind of guide us, how long it will take for us to, execute in this part of the business before revenue starts flowing in.
Yeah, this is basically, to be honest, is covered in our BFSI and the digital payment side only. So this has been covered in the pipeline and what we discussed. We are having certain differentiator which we worked out now for enhancing and getting more business from this Soundbox and UPI QR based acquiring payment acquiring side. So in this, what we are offering is basically the Soundbox, wherein on the QR side, if the merchant is receiving the payment, same day the payment will be settled in certain cycles, which the other peers are not offering. They are offering T+1 solution. And we are also working with certain other financial institutions to offer them certain lending kind of features which usually the other peers are offering. So in a nutshell, we are expecting a good business in coming year from the same segment also, because this is a requirement from the existing banking customers, wherein they are actually the major loser in terms of the CASA, due to these particular their own merchant customers who are right now using the Soundboxes of other players like Paytm and other PhonePes and all. So the banks want to maintain the healthy relationship with their merchants by offering the Soundbox through technical solution provider like us, and we are offering through them which will make sure that quickly we can expand. It can even be separate call for if you are willing to get more on this.
And sir, how many financial institutions have we been able to tie up with till date for this business vertical?
In the question, I just want to get this question from you again.
Sorry, sir, you're not audible. Can you repeat that?
Your voice is not clear. So can you please come again?
Sir, yes, sir. Can you please tell me, till date, how many financial institutions have we tied up with so far for the Soundbox business?
No, the process going on, that's what I said. But the current ideation related to the same-day transaction settlement that has been done as a differentiator. It has been added. It is a technology portion. The other institutions tie-up now, that is going on as a process. If you want to get more, we can have a separate call for that, or even we would like to host you if you can come and meet us at the company. We'll be able to explain you more about this.
Sounds good. Okay. Thank you, sir. That's it from my end.
Thank you. Ladies and gentlemen, with that, we conclude the question and answer session. I now hand the conference over to the management for their closing comments.
Thank you, everyone. Thanks for the opportunity to present our company's performance, and we have tried to answer as many as questions from your end. Hope we have successfully give all the satisfactory answers from our end. If anything has left behind, all of you are most welcome to Virtual Galaxy. We request all, if possible, visit our facility, visit our office, and we have a more detailed discussion in any case. So we are happy to host all of you. With this, I thank everyone. Thank Rutulji, thank Sachinji from myself. Thank you, everyone, and a good day. Thanks.
Also, I would like to thank all the participant investors. We as a hybrid integrated SaaS product-based company willing to expand with all the geographic globally with strength to strength with the product portfolio enhanced with the AI capabilities, and we are here to stay, here to grow and expand our horizon. Like Modi ji said, local to global. This is what the mantra, and we are willing to expand with the help of all the investor as a Bharat की company, Bharat के साथ और global के भी साथ. This is what our mantra is. Thanks a lot for giving your precious time. Thanks.
Thank you. On behalf of Atlas Capital, that concludes this conference call. Thank you for joining us, and you may now disconnect your line.